Hey guys, Sean here at K2 Trades. Today I'm going to be going over the trades we took on Thursday, May 30th, 2019. Looks like it wasn't a very great trading day for us as we closed out the day with one win and one loss, totaling our gains to only 1.1 pips. Unfortunately, this is the reality of trading. You can't be 100% all the time. You guys will encounter losses no matter how good the trade looks. So if someone tells you that they win 100% of the time, chances are that they're fucking lying to you, because it's just not possible unless you can foretell the future. So let's pull up this trade so I can explain that to you. So let's see the odd versus NZD. Let's pull up the Telegram. I sent this trade out on May 29 at 8:47 p.m. So let's pull that up here. May 29, 8:47 p.m. So that's about right over here, 47. So that's 30. So let's pull up the four charts. Actually, let me put a marker on there so you guys can see. Where we were. Alright, so looking at this trade from a bird's eye view, it looks like a really good trade because price is above the cloud on the 30-minute, 1 hour, 2 hour, and 4 hour. So this demonstrates a trend upwards. And in this situation, we'd only take a buy position. So let's see, let me put on the parameters. So let's maximize the 30-minute first. We enter the trade on either this candle or the next candle, and I put on the parameters. So I told you guys to take this trade buy position at 1.06264, and target was set at 1.06394, and the stop loss was set at 1.06134. There we go, it's set up. And let me run through it so we can see like what went wrong here. I mean, like the trade looks good here. It was trending up on 30-minute, 1 hour, 2 hour, and 4 hour. So I mean, there's a number of things that could affect the market. I mean, you know, Trump could have sent out a tweet that like affected the market. There must have been some like random news that was released. Honestly, I don't know. I didn't see any news coming up, so this could have just been a random encounter. So let's move forward. So it looks like it pulled back a little bit. Looks like it was ranging around for a little bit. So even using our exit strategy, if you guys don't know what our exit strategy is, so this is my exit strategy. So basically, I move the stop loss in increments of 25% from the entry point. Once price reaches 50%, 75%, and 100%, and then I let profits run after profits exceed 100% and cover the spread. So to do that, you'll have to calculate it. Unless your broker does it for you and you're able to just put in the pips or the percentage. I mean, you can do that, but my broker doesn't. So I have to do it by hand. So the total, so let's see, this is the odd NZD. 100% in profit would equal 13 pips. 75% in profit equals, we'll calculate that in a little bit. So 50% in profit would equal, so I'd pull up the calculator. I'd put in 13 divided by 2. That'd be half, 6.5 pips. 25% profit equals half of that, so 6.5 divided by half, which is 3.25. I'll just round that up to 3.3. And then to get the 75%, you're going to add 25%, which is 3.3. Oops, 3.3 plus 6.5, and that'll be 9.8 pips. Alright, so those are the numbers you need to determine the exit strategy. So 100 pips, 100% is 13 pips. And let me just, I'm gonna like put these in here. So second profit, so 75% is 9.8, so that's 9.8. So I'm just going to set a line there so you guys can see where 75% is. Let's call that green because that's 75% profit. Let me just write this in right here. 75% profit. And then I'll put in the next number, which is 6.5. That's going to be 50% in profit. Let's copy this. So that is 50% profit. And the next is going to be 3.5. So I mean, technically we could have broke even. I mean, unfortunately I wasn't paying attention to the chart at that time, so I mean I just took the loss. If you guys followed it exactly as I taught, then I mean you guys probably didn't take that loss. But I mean, you know, you win some, you lose some, you pick your battles, and you just keep going. Alright, so let's see. So the way that this works is, let me pull it back to here. Let me start. So the stop loss is here right now. This is the original stop loss. And once price reaches 25%, which it does right there, you would have moved your stop loss to break even. So in this situation, I mean, if price retraced, which it did here, you would have just gotten out, and you wouldn't have lost anything. You would have just been broke even. And I mean, if price reached up here, then you would have moved the stop loss to 25%, and then you would just trail it. So you can so that's exactly how you would minimize your risk and maximize your profits. I mean, unfortunately for me, I wasn't paying attention at this time. I was probably busy doing something, and I didn't set my my automatic stop loss to adjust, unfortunately. So that's how I took a loss on this trade. But if you followed my exit strategy, you would have broken even. You know, you wouldn't have lost anything. That'd be best case scenario. But let's keep going forward. So it looks like price started to range for a little bit, or for a lot of it. It looks like it was going for quite some time. Oh, there we go. And then we lost right here. I mean, we had this trade for a very long time. Usually if you hold a trade for this long, I mean, usually I would just exit at break even because this is way too long. I don't like holding trades for this long. So how long were we holding that until we lost? Geez, 18 hours. It's a long time. So unfortunately, we took a loss on that trade. Thankfully, it was only 13 pips. And thankfully, we won on the next trade. So we were able to offset that. So this is what I mean when I say that I minimize risk and I maximize profit. So let's go to the Euro USD so we can go over that trade. Alright, here we go. Euro USD, let me pull up the Telegram. I sent you guys this signal on May 30th at 6 a.m. So let's pull that up on the chart. May 30th at 6 a.m. So let's put this right over here. 6 a.m. There we go. Now we mark the chart. So let's verify the trend and the direction of price. Shimoku's taking forever to load. It's weird. What's wrong with it? Reload it. Alright, there we go. So on the 30-minute, price is below the cloud. Also on the 1 hour, 2 hour, and 4 hour. So this demonstrates a trend downwards. And in this situation, we would only take a sell signal. So we got the sell signal right there, and that's what basically notified me to take a sell position. So let's maximize this, and let's go over this one. So our entry point was set at 1.11301. Let's put that in right here on the entry. Our target is set at 1.1151, and our stop loss was set at 1.13451. Alright, and I mean, since we're already doing this, you might as well, I'm going to show you guys how I set up the exit strategy. So this is for the Euro USD. 100% in profit is 15. So that's 15 pips. What's half of 15 pips? I don't know, my math sucks. So let's do this. 15 divided by 2. Oops. 15 divided by 2, it's 7.5. Actually, that's half. So that's half. 7.5 divided by 2 is 3 point, let's round that up, 3.8. So we'll do 7.5 plus 3.8, and that is 11.3. Alright, so let's plot this on the chart. Actually, no, guys, I didn't even go over the loss for the Australian dollar versus the New Zealand dollar. So let me go back to that real quick just so I can show you guys. I'm just being 100% transparent with you guys, so you guys know exactly, wins and losses. You can't always win, unfortunately. Alright, so this was a loser, unfortunately. Loser. And then I'll call that red. So we took a, how many pips was it? 13 pip, a negative 13 pip loss. And if you had one standard lot, that would equal $10 per pip, and 13, show this to you guys right here, 13 pips times $10 equals a negative $130 loss. But I mean, if you followed all of our other trades, you would have had a ton of wins. So like, this $130 loss is really nothing. It's just a drop in the bucket. So guys, this is just me showing you that, can't win all the trades, unfortunately. Oh, why did I delete that? Okay, I'll just leave it on there. Let's go back to the Euro USD. Alright, so here we are. Alright, so it looks like it was triggered right there. And then, so let's put in our sliding stops. So 100% would be 15 pips. 75% is 11 point, what was it? 11.3. So I'm going to put a horizontal line right here. Color that green because we want the targets. 50% would be 7.5. So next one, and 25% is 3.8. So that would be right there. So in this situation, we hit 25% here, so we'd move the stop loss to color this red, so the stop loss. So this would be the break-even point. So now we're not risking any losses at this point. So if price retraces back, we would just break even. We wouldn't make any profits, but we would break even. We would just break break even with no losses. So let's move forward. Alright, so move down even more. So when it moved down here, so we would have deleted this, actually. So we wouldn't have deleted that. We would have moved the stop loss to 25%, and then we would delete it. And then since it moved down to 50%, 75% I mean, we would move the stop loss again to 50%. And I mean, in such situations, if I'm following it and I'm watching it live, I will just keep sliding it down as it gets closer and closer. So it looks like I exited this trade at 1.1116. So I mean, it's like somewhere down here. I just kept moving it down because I was following it. So we would have deleted that, and then in the situation where it moved back, I would have gotten out. So it looks like I was actually, it looks like I might have exited this manually. Once it got to this point, I probably got scared and was like, oh man, I got to get out of this trade because it doesn't look like it looks like it's a little erratic. It keeps moving around like a little too much. So let's keep moving forward. Yeah, so even if you didn't move it down here, you still would have gotten out at 50% or 25%. So you would have, there's no way you would have lost this trade. But it looks like it's been going up. Let's see if it gets stopped out. I mean, I'm pretty sure it got stopped out because I didn't get full profit on this. Wow, so like, yeah, this trade went on for a really long time actually. Yeah, there we go. So I mean, price went to the stop loss, but the thing is we already adjusted our stop loss to break even. So regardless, you would have either broken even, gotten out 25%, or got out at 50%. Looks like I got out right here because it looks like I was watching it live, and I exited right when I started to notice that price wasn't going the direction that I was wanting it to go. So in that situation, yeah, it looks like I won 14.1 pips on this. So let's calculate that. Color that green because I actually won this one. Winner plus 14.1 pips. One standard lot equals $10 per pip. 14.1 pips times $10 equals $140 or $141 profit. So I made $141 profit on this trade. So, well, I didn't, but if you guys took a standard lot, that's how much you would have made. And that's how we ended up with a 1.1 pip gain. It was like super close. So I mean, it could have been a red day, but I mean, thankfully I was watching the trade at this time, so I was able to get out, you know, with maximized profits. And basically, that's about it. So those are the trades for Thursday. I mean, unfortunately, it wasn't a good day. Not all days can be good. But I mean, as you've been following me, we've had like pretty much a great month. So that's that, guys. Anyways, if you guys haven't already, please like, comment, and share this video. And don't forget to subscribe so you can be notified when we post our next video. Hope you guys enjoyed that. Until next time, guys.